So I want to welcome everybody to another episode of the Roundtable Talk with the Kingdom. As you can see, I got all your favorite names up here with me today. Everybody's favorite David Knight. We got Ryan. We got Fridge. We got Sambo here with us this afternoon. Welcome, Sambo. We got Carly back, and we got Big Wick. Glad to have all y'all back on the stage with me. How's everybody feeling today?
Feeling good, man.
Good, yeah.
Man,
Yeah, doing good.
Cool, cool, cool. Everybody Sunday pretty good. What about y'all in the chat? Everybody, y'all feeling all right? Mr. Taco, Geo, Blaze Amazing. Everybody feeling good? Went to Florida. Cool. Hey, yesterday was crazy. Yesterday was crazy.
bro,
Friday, you
yesterday
mean?
was horrible. Yeah,
Well,
Friday.
Friday was crazy.
Ah,
Still got some people hopping on in.
Yes.
Cool, cool, cool. Hmm. Blazer say, do we think we keep dumping? It's very much possible, but I'm not gonna try to time it right now. Crypto looks okay. So um we might get a little reversal just to squeeze out some of the bears, but for the most part, not everything looks so solid right now. So um we got some interesting topics this afternoon. We're gonna be looking at some of the tariff spats with China that could have been the whole motive why the market sell off why it did. We're gonna look at some of the crypto and see how they're going. Probably check into some of the earnings that we have coming up this month, including Tesla. I think we can look at United Healthcare. I know a lot of people are pretty dope in there. I'll look at some of the charts on those and Netflix possibly. Um, I think we're gonna bring up the topic of rare earth minerals. I think that's something that's I'm not gonna say overlooked, but probably just needs more attention tied to because there has been money in the market on stocks that's tied to rare earth minerals, and just see how this whole government shutdown is probably kind of playing out with Fridge and everything, and we're just gonna try to see how we can be able to pivot the best way and adjust to what the market's actually giving us going into next week. So if you can look at my screen right now, I do have the spot chart pulled up, and these are just my levels that I'll be watching going into next week to kind of see where the dust is really going to settle. So, can everybody in the chat, can y'all see my my screen? Let me know. Let me know.
I can see your screen. Yeah.
Okay. Okay. Cool. All right. So, just looking at the spot right now. Um, as of last week, I kept constantly posted that 673 to 674 was a critical level that I've been watching on the S&P. We did retest these levels and came close a couple of times, but for the most part, it just couldn't break past this resistance up here at the 674 mark. So all of these lines are just, if you've been watching swing high, swing lows using the Fibonacci retracement levels, I just go through different time frames, larger time frames on the daily and above, and just find different ranges that I like for swing high, swing lows, and I mark them out. And that's what gives me these levels that you see. And I just color code them for, personal reasons, whatever my brain picks up on. So right now, we're kind of approaching a neutral zone. We had a big sell off, and I had support here at the 665 to 663 level, but we completely just smashed through that level. Um, and I think I was looking for this to actually hold up. This was actually a pivotal level. We smashed through it, completely broke a previous swing low. swing high, swing low, broke through that, and now we're kind of in this neutral area between 653 and 650. So, depending on tomorrow, whether we open flat or we gap up and we kind of follow the recovery of crypto right now, because I think Bitcoin flash crashed all the way to about 102, but currently at the moment it's sitting at about 114, 115. So if it continues to rise, we could possibly see the market gap up, um, and that would be the make or break, depending on how the rest of the week's going to play out. Tomorrow's interesting. I think it's Columbus Day or something like that. I think it's just a bank holiday, um, if I'm not mistaken. But um, we're just gonna kind of
The
see how
bond market closed. That's the only thing that's closed tomorrow,
the
and
bond
that will
market.
have a little. Yeah, it will have a little bearing
Okay.
because it's one less thing that smart money can put their money in.
Oh, okay. Okay. It makes a lot of sense.
Right.
Okay. So tomorrow, that makes sense. I appreciate that, Carly. Um, if the market does make a little slight recovery, I'm looking for at least a retest of 660 to the upside. If it can reclaim 660 and this area, and we can kind of build support back around this range right here, then we could see this area right here get retested. The 663 to 665 get retested later on throughout the week. Now, a lot of the other stocks that I've been looking at, that makes up a part of the S&P 500, they not looking too hot. A lot of you guys know I've been holding Amazon, and I've been kind of taking a beating on it for the most part. But that sell-off kind of changed structure on a lot of the other stocks. Um, and with these earnings coming up, a lot of this can cause some either little stagnation in these levels between 660, 673 and 660, or we just have to see how the earnings are going to play out into the rest of the month with Tesla, with Google, with Meta, Microsoft, Apple. All of these have earnings reporting this month. So I expect some volatility, but it's definitely gonna play out pretty crazy. Friday we ended up finding some support around 653. So between 653 and 650. That's, like I said, that's kind of my neutral zone. This is the area that we look at back. When was this? September 9th. This was a zone right here where we didn't visit very long before the run up. It kind of got stuck right there before taking off again. We retested one, two, and then this will be the third time of the top of this little zone right here. So this was kind of a pivotal level for it to hold in order to keep it just from being drugged down even more. So Friday was crazy. A lot of people was in calls, and the market took it away fairly quickly. I know it's kind of a surprise to me. I wasn't expecting it to fall that fast, but I mean, for the most part, that's just what the market gives you. What about you guys, David? With some of you guys that was trading the market Friday, Sambo, uh, how do you guys feel about Friday?
Cooked. just I'm just kidding. I was watching. I was in some calls early on. The market seemed really choppy. I wasn't the biggest fan of the way that it was moving on Friday. So I had gotten out of calls early on, and I wasn't in anything when the market dropped. Um,
Okay, okay,
did I foresee that happening? No. Nobody expects the market to drop that fast. Um, so it, may have been a stroke of luck, but I was talking on the last round table
right,
about that trend line that we had lost on IWM.
right.
And I was saying to watch for that bigger pullback. Just because we had a drop doesn't shift us into a bear market.
Hmm.
Sam and I have been talking for a while now about bigger pullbacks to previous all-time highs, especially on SPY. We're not there in IWM, right? But on SPY, we need to pull back to previous all-time highs. We blew right through them, and we have not retested them on daily and 4-hour time frames. You're looking at around 613 or so. You're going to get a pullback with IWM. And I actually just shared a chart in the chat. To me, we are not flipping bearish until we lose that 230.5 that I marked out on IWM. You can see some very strong rejections there that I think have to be retested at some point. And that retest could be coming sooner rather than later, maybe within this month.
I definitely remember you talking about the pullback that we needed to see on IWM last Sunday, and that happened.
If you think about how futures like to move, while we have not gone and swept all-time highs on RTY, which is the IWM futures, we did sweep all-time highs on IWM, and you can see the rejection coming in now. So naturally, because we hit those all-time highs, we're gonna have a pullback.
Yeah. Okay. What about some of you other guys? How do y'all feel about Friday?
I
One of
can
the
talk.
biggest things for me is, trading some of the ICT or SMT methods. One of the things that you can start to notice in hindsight, of course, is that there was a high time frame divergence between ES and NQ. When you typically see something like this, it does imply that there's going to be a bearish move. So I had an idea that we were going to see a pullback in October, and I know me and Wick have talked about it, and I think even David has mentioned something about it, that October might be bearish. But then after Friday, it's like, okay, I hit my target of what I thought we would be at by like late October. And after having a daily chart or a 4-hour chart like Friday, it makes me wonder how much of the structure has now changed, where we are opening the doors to move significantly lower. Like, is NQ going to go back down to 23,200 as it sits right here at 24/7? I think this is just the start of a bigger move down. It's the big reset. This market continues to move higher for, in my opinion, no real reason. So I think it's a good thing that we're coming back down.
Yeah, I agree, and I know a lot of people might have said bear market or something along those lines, but I mean this is just a healthy retracement. The market's just been overextended, and it's been constantly running without just a real breather. Um, let's see. Here's 625. So I mean, starting in June, I mean, we just seen a constant just uptrend. We seen a slight pause. Nothing really broke down and came back and retested any old levels. Hell, I mean, it's 6111 level on ES. It's never been retested since it actually started running. So we've seen small pauses in the uptrend, but for the most part, we just haven't seen anything that just really said, all right, we've ran high enough. Let's go back and see where the true money or the true levels are, where institutions want to just kind of start piling their money back in. Because I mean, this is probably just gonna, like y'all just said, we're just gonna see some profit taking probably pretty soon.
And correct me if I'm wrong, but a 10% move is considered a correction, right? And then anything over like 12 is, I don't remember what the measurement are. Fridge, do you know?
Yeah, I believe it's 10% is a correction and 20% is usually a bear market. And you get 20% pullback.
And what's interesting is if you look at SPY from now, I guess previous all-time highs back to this like 613 area that Wick was talking about, it's only 9% on SPY. So it's technically a correction.
Yeah, I've been screaming about this for quite a while. And you're looking on Qs, that previous all-time high that I'm looking to go get retested is 541.28.
You selling the Qs?
Yeah.
Yeah, I can.
I'm gonna be the biggest bull you've ever seen on that retest.
I can see that. It's a lot of like from what I'm looking at right now. It's a ton of bulls sitting right here between 582 and 560. Like we've seen a
Yeah.
large consolidation right around these levels right here before that move actually took off and pushed to the upside. So I wouldn't be surprised to see us actually dip down somewhere in this area here and kind of see a little chop within this zone and let them decide whether we're going to continue to see another move down or not. I mean, I'm not the biggest bear right now, but I wouldn't be surprised if this tariff talk, I don't think it's gonna have the same effect that it did when it first happened back in January. Just because this is something that we've already seen before, but I definitely wouldn't be surprised if just the the spook of what's to come could continue to slowly drop the market down a little bit more. So
Yeah, I did. I do not think that anybody should open up Monday and just say I'm buying puts.
so one thing that I have wanted to talk about, we talked about it a little bit last week, which was the government shutdown and its effects on the market and how since we don't have any real news to come out right now, the market's just kind of been running, running loose. Um, we're in
I
what?
actually think that Friday's move wasn't just the tariff. I
Hmm.
think it was a combination of the government shutdown coupled with tariffs and that we've been on this parabolic run since April. I think it was just too much and it triggered the big sell off and I feel like there were definitely signs that something had to have been coming, but I the this government shutdown, if it coincides with that FOMC meeting, it's gonna rattle the markets bad.
Like
And we are headed towards that.
we're eight
Charlie, I,
days.
I I agree with that. Sam and I were talking, and we have a question, and maybe Fridge will know this as well. When the government shutdown ends, all of this delayed data, does it come out at one time?
No, because nobody is working right now. And so when they're working, it's an everyday process of collecting this data. And so when they do go back to work, it's going to be this huge data dump that they've got to go through and then produce these reports. I don't know how much of a delay it will be, but I don't, depending upon the timing of it, it may not matter. I'll tell you, the last Trump shutdown, the FOMC meeting was like a few days after the government went back to work, and they ended up holding the rates because of the delays in the reporting. So, when we have an FOMC that is 100% data driven, I feel like it would be fiscally irresponsible for them to make a cut without having this data that he keeps preaching. We are data driven. And we know the market is priced for two cuts for the rest of the year. If we weren't to have a cut, that would really, really, really rattle the markets.
Okay.
So I just want to, I'll step in here to kind of go off of what Kyle is saying, which is 100% true. Believe it or not, though, I found this on the internet over the weekend. They are going to be bringing people back for the labor market to get out CPI data on the 24th of October, which is 5 days before FOMC time. So CPI data on the 24th, put on your calendars. It's delayed, but they are going to be pushing that out. So that is probably because, like Carly is saying, you can't do a rate cut without having data. So I think they're bringing that back as a critical data point to help maybe guide the FOMC for the rate cut on the 29th.
But
So
I thought FOMC meetings, I thought it was on the 24th.
let me
It is the
look.
24th. The CPI will be released on Friday, October 24th at 8:30. I don't know when FOMC would be. Probably the following Wednesday.
Yep, 29th, 16 days, 19 hours, 31 minutes. Who's counting?
Not to be specific or anything.
Who's counting?
Well, I'm on the CME interest rate Fed Watch tool, which says like a countdown for the second for. That's why I was looking at it, because I wanted to double check also before anything else. But yeah, so with that, my guess is that they're gonna pump out CPI data the Friday before FOMC on that Wednesday to kind of maybe give them something to go off of for a rate cut or not. So if CPI data comes in awful on that day, there's probably gonna be some panic of not getting a rate cut on the 29th, if I was to guess.
That's really shocking to me because of all the data, that would be the one you would want least in favor of a rate cut, because
Yep.
that could show some inflation. You want labor data. Labor is the only thing that is driving a rate cutting cycle. That's really shocking to me that they're doing that and not that they aren't employing the BLM, or not BLM, BL.
BLS.
Thank you.
Yeah, I think, but I mean, think about it. It's strategic though, right? I mean, if you don't release bad jobs data, that's what the major crack in the market is right now, is the jobs data. If you don't release it, it's like no news is good news. I know we talked about that last week on this podcast. Was no news is good news. If you get no bad jobs data, then who cares, right? I mean, so that's kind of what I feel like they're saying. We're not going to publish that as much, but CPI data, I guess they're going to be okay with, because it probably won't have as much of an impact compared to an awful labor market. And that's kind of what my guess would be. But yeah, in case anybody wants it in the chat, there's the link to the CPI data being released later on, in case anybody was wondering, if you want to read into it a little bit more. So 8:30 on the 24th, 9 days delayed. So market calendars.
Okay, so then, I mean, that again sets the stage for that. Maybe they hold cut. Eesh,
And
I don't
that's,
know.
yeah, I mean, and that's one of those things where, if you look at what they're pricing in right now for October 29th, they're looking at a 98% chance of a cut.
Exactly. And
So
the market
that's
is
going to
priced
change.
now. And IWM will take a huge hit for that.
Yeah, if there's no cut.
Yeah, I agree with that.
That's interesting.
So I'm honestly shocked that it hasn't really adjusted much since the government shutdown, because a week ago it was 96%. And now it's 98. So we've had now the shutdown going for about a week, and it's actually gone up for a rate cut prediction, or a rate cut expectation compared to going down. I would have thought that the uncertainty would actually lower the chance of a rate cut, but apparently the market's kind of just like, whatever, we don't get any data. Okay, who cares? We're going to keep doing what we're going to keep doing here. Maybe this is going to help the Fed, quote unquote, get ahead and cut rates before the data comes out, and then nobody sees the bad data. I don't really quite know, honestly.
I don't either. It's never happened in history, to be honest, a government shutdown and an FOMC meeting. So it should be really interesting, because I believe that this government shutdown is going to last a while. On Friday on Bloomberg, Patrick McHenry, who was the interim speaker before they put Johnson in, he thinks that this shutdown is going to go to Thanksgiving.
So is it true that after 30 days of like a government shutdown, the government workers actually lose their benefits, like some of their benefits that they have?
Yeah.
That I don't know, but that's frightening. I mean, it's bad enough. 1.25 million people are not getting paid next week. And then we had the huge layoff on Friday. If that continues, the layoffs are going to continue. And then you're getting into the holiday season. Like, it's the worst timing.
That's terrible timing.
Yeah, it's not great. I know that the assistant coach on my football team that I coach for, he is in the Air Force and he's not getting paid.
I
He's
have
That's
just
heard
terrible.
that. Yeah, I have heard
he's
that.
going to work for free, right? So like he still has to report for duty, but
So
he's worried
terrible.
because he's got to put food on his family's table, and he's not getting paid. So
Yeah,
Well,
that's
and
rough.
there's supposed to be, you know, stopgap type of mechanics in place for them still to get paid. And I don't believe that they are implementing them. It's not I don't know. I can't imagine that will go on very long because that will be extremely unpopular with the American people.
Mm. I wonder if something like that, say if people start getting furloughed or cut off and losing jobs, like how is that going to reflect in the next jobs report that we have?
Well, it does affect economic reports. The last big shutdown had a ripple effect in the economy that showed up like 3 months later. So if this were to go on for a while, it would be something that we would be looking at probably Q1 25
Okay.
of seeing a ripple effect. Um, but if it does go on for a while we're just entering ER season, if it starts to come up in conference calls of earnings, that would be something to be worried about. It's probably good that banks are to start next week because as of now, it won't have a ripple effect into banks.
I wouldn't be shocked if this holds out for a while, honestly. I think the administration is not in any kind of rush to push this
No,
shutdown off anymore. I
no.
think they're just kind of using this as like a way to cover the bad data that is there. Like there is bad data, there's cracks in the labor market. It's very, very well tracked from data from the last, year you can look at it. I think this is just going to be their way of saying we're not in a rush to do anything of that nature. We're not in a rush to open it back up because I can promise you, I feel like if the jobs data comes out, like if they were able to look at it and say it looked good, they would end the shutdown like right away and be like, look at this data, guys, look how awesome our economy is doing. Like it's one of those things where I feel like where their administration is in no rush to end the shutdown until the labor market you know fixes itself or until who knows what, but they're not in a rush to fix this at all.
So you think they'll
Well,
drop? You think they're ready to milk this time?
I think
yeah,
so. I think they're gonna
because
milk it.
it gives them a chance to do these government layoffs that they wanted to. They tried with Elon, and it was so incredibly unpopular with the all of the people, both sides of the political spectrum, that he had no choice but to stop doing that. And this does give him an avenue to do these layoffs and then have a party to blame it on.
And I think,
So
but it's really interesting about where it is now because when I saw the news thing about him, threatening more tariffs, and I was like, dude, you don't have a leg to stand on right now. Like your whole government is shut down right now. So like, if you think that somebody like China is gonna surrender to the knee for you when you have literally your government is shut down and no one's working, like you're absolutely hysterical. So China's not gonna bend a knee to this dude, and so I think that's why he came out today. It was like, oh, like it was just, this
we're
kind
best
of minor
friends.
thing or whatever. It just doesn't make any sense to me.
I think it was like you know, trying to get our eyes to look at something else besides a government shutdown. Um, but he's just so funny. That, and I think he was really pissed off he didn't get nominated for the Nobel Peace Prize. I think he was a little salty over that, and he lashed out like a. I think he was a little sad.
Yeah.
I think it's also like we've talked about this before also and ever since we had Liberation Day and stuff like that. I think it's markets go to all-time highs. He throws a warning shot at tariffs again. Market pulls back down. He's like, okay, guys, I'm gonna go back on it again. Like I think what he's doing is that like when markets are all-time highs, he's gonna throw that warning shot out there. When markets are pumping, he's gonna throw that shot out there and just see what happens. And he's waiting to see where if he throws that shot out there, what if the market didn't react as bad on Friday than it would have? He probably wouldn't have come out on Sunday today and been like, oh, like, it's whatever, hey, like we're gonna negotiate and stuff like that. I think if the market didn't react like that, I think he wouldn't have said anything over this weekend. They'd be like, all right, cool. Market doesn't care anymore. Market's got it figured out. We're good to go. We're going to keep pushing up to all-time highs. But now that the market had that 2.5 to 3% move on the downside on Friday, I think he was like, oh, okay, let's pull back a little bit. The market still doesn't like us talking about tariffs and all that kind of stuff. He's going to just keep throwing these warning shots until his 4 years are up and then just kind of wait and see what happens, or until the market is so immune to his posts that he can say whatever he wants, and the market's gonna be like, yeah, whatever, dude, do whatever you want. Like, I think that's kind of where we're at in a point.
Yeah, I agree because that's really where the markets had gotten. That's why I think Fridays wasn't just a tariff story. I think it was a combination of, oh shit, everything really isn't great. We've got some issues right now. But like you guys were saying with your charts, we were so due for a pullback, and it's
Very,
healthy for markets. And
very.
Yeah,
I,
I asked because I shared that screenshot in the chat of and I've been watching this is we trade ICT concepts like Sam was saying earlier in futures, right? And we do this on smaller time frames. We do it on the 1 minute, we do it on the 5 minute, we do it on the 15 minute, right? But it applies to every time frame. And if you look at the daily time frame, there's a break of structure. There's a pullback. Well, there was a pullback and then a break of structure at 585 on Qs. And there's liquidity sitting right there. There's a fair value gap sitting right there. Do we need that pullback? The pullback, retest to break a structure at 585 on Qs, and then an attempt at a rally higher. I think so. Then that's where I would be targeting this week.
It's funny you say that, Wick, because if you look at NQ on the daily, we've actually just swept liquidity down at 24,242 flat and getting a nice, opening of Asia pump. So it makes me wonder if we're gonna, go back higher Monday.
We could go higher and then see that rejection.
Yeah,
yeah, exactly what I was
futures
thinking.
have already gapped up, huh?
Yeah, and it's kind of like what Carly had made that post earlier, basically saying like, "Hey, I'm not bearish or bullish," and I feel that. I couldn't feel that more, right? Like I had made that comment on last Sunday of I have a hard time being long when I feel bearish, but I'm not bearish thinking, "Oh my God, this market's pulling back 40%." I'm bearish in the sense of like, hey, we just need to go retest previous all-time highs. But I don't know when it's happening. So I find myself just being quiet.
Yeah.
I think that the market really wants to widen its breadth. So, healthcare, consumer staples, industrials, materials, those are sectors that have been hammered and then never popped back up post Lib Day. And I think the market wants to start, investing in those. And I think what's going to happen is they're going to pull from the Mag 7 trade and then start widening out. And so that transition is probably going to produce some red days because we're so concentrated in those Mag 7 trades. So, and that's a good thing. Again, you just have to make sure you're prepared for it, and diversification.
Yeah, I'm looking at the heat map from Friday right now, and I mean it's just a pool of blood, like
Yep, it was. It was
finance,
market wide.
technology service, electronic technology, producer. Like there's a couple of things that was able to stay green. One of the things that I always look for to stay green when the market or when tech slows down or these slower like dividend type stocks, Coca-Cola. I think Fridge and Ryan, we just talked about this yesterday on the trivia night. Some of these companies that's slower moving, but they're not as volatile. So you could see money start to flow into them if investors start being undecided about where to put the money in or expecting, some stagnation in, actual technology or whatnot. So we'll see a couple of these stocks that actually move up. One thing that I've always kept my eyes on over the years, sorry to stray away, but Monster Energy drink. I don't know what it is about the company, but the company tends to perform fairly well. Uh, Year
It's
over
Sam.
year.
Sam's propping them up.
Man, you
Shh, don't
drinking
expose me. Come
you
on.
drinking monsters like that, man?
Yeah, bro, it's like 4 or 5 a day. We ain't gonna talk about it though.
Wow.
God
Wow,
damn.
Bruce.
Your heart is gonna
I thought
fucking
I
blow
drank
up,
a lot
man.
of coffee.
Like
Yeah,
if we,
when Sam runs to the gas station, I take calls out on Monster.
bro, bro, check this
You
chart
need
out
to
on
start
Monster.
drinking.
Like Monster
Honestly,
sitting,
how
it's at all time highs, I believe,
crazy enough, and you guys can give me crap for this. I actually don't have any shares of Monster.
bro. It's at 69, pushing 70. Like it doesn't pull
Wow.
back, and it has earnings on the 30th.
Look at that monthly chart, just over like since '04. I mean, just
Yeah, it's
I
been
love
carrying.
those kind of charts.
It's
I
just
love those
carrying.
charts.
So yeah, stocks like that, and hey, judge me if you want to, but I say I'm finna start buying some Ralph Lauren shares
a
because this
nice sweater
company,
out there with a teddy bear on it.
bro, look at the chart, man. It's what
Holy
was this
smokes!
exactly? It went from 115 to it's sitting at 313 now. I don't know what it is about the company or the financials of it, but yeah, it's pretty dope.
See,
So
Man, tax time's coming up. People are about to ball out on some Ralph
hey,
Lauren.
I got it. I almost bought me one a day.
You know what
Mm.
else? I think there's a really good chance that next year Trump is going to do um uh oh God, I can't think of it. Sending out checks from the Trump, or
Stimulus.
not the Trump money, the tariff
Yeah,
money.
tariff rebates. Yeah, I've seen a lot of talk about that, and I think that the tariff rebates are going to be pretty decent amounts of money. You can almost look at them as stimulus checks.
Stimulus, that was the word. Thank you very much. I could not find that word. Yeah, I do too. So that's going to be something that I'll be watching for staples, and then maybe even discretionary, um, because that's going to go out to the economic levels that are going to be hurting the most. So I think there's a good chance that we could see that next year.
I want to ask y'all a question real quick. Has anybody? I asked my wife about this earlier. Has anybody really heard anything about the possibility of universal income? Has anybody ever heard
Oh,
anything about that? Or no? Like,
In
does
what
any
way?
like? All right, so I don't really follow too closely about the like the potential stimulus and stuff, coming out. And Mirage just said yes, it was being debated in Canada. Um, Bread Boy, I'm gonna talk about Celsius one day with you in the chat. But back to what I was trying to get to. When COVID happened and everything, a lot of businesses and stuff got shut down, right? So, it put people out of jobs, and then you come and you give people these stimulus checks, 2,000, 1,500, however much it was per household or whatever. So I'm digging a little deep. You feel me? I might be putting my conspiracy hat on, but I'm just thinking like, you know, AI, robots, ChatGPT, all of these things are coming at a pace faster than what, probably faster than what we're feeling right now. When I'm showing my age, but checks and cash, I remember when people used to come and pay with stuff like that. And now if somebody come and pay with a check, you like, man, I don't think the cashier even know how to process a check at the register. So, Carly, you know exactly what I'm talking about.
I do. I'll tell you, my very first assistant I had when I had a business did not know how to write a check. And that was mind blowing to me. And this was even, I don't know, 10 years ago. But no, I mean, I don't even own a checkbook anymore.
Guys,
I found
I had my first cashier job. What was that, back in 09? And even checks were like, even I didn't really know what to do with a check back then.
Yeah.
that
So
really makes me feel old.
So with that being said, stuff transitions faster than what we actually know until it's already there. Everybody's using tap with their phone and tap on the card, just things like that. Me and my wife just went to Costco. I mean, not Costco, Whole Foods today, and I guess they're partnering with Amazon, and they had a pay with your palm or something like that. At the register. So all that to
They're
say,
owned by Amazon. They're
yeah.
owned by Amazon.
Yeah. So all of that
Yeah.
to say, with AI coming into play, with these robots coming into play, with companies laying off people left and right, like what if eventually they try to move things into people, depending on a universal income. So I mean that's a thought that I that's something I think about down the line. At one point in time, you went to school to be a coder. Now you can go in and chat GBT and tell them what you want to write a script for, and you got people writing scripts in trading view, trading indicators and things of that nature like that. So
I'll tell you, I'm an adjunct instructor for a community college, part time, and that's one of the biggest challenges that we face is ChatGPT. We have a
Me
hard time
too.
stopping students from actually writing papers using ChatGPT.
Me too. And I do the same thing. I'm an adjunct also. And because I'm not very versed in these chat bots, and I really do need to work on that. At first, I couldn't pick up on the symbols, but the more you read them, the more you do. Because the biggest thing I noticed was they didn't have I in there. Typically, when students write papers, there's always an I think, I believe, and you don't see that as much with the chat GPT. But their homework, like I think of Fridge trying to teach math to high school students. I imagine that they're using chat GPT to do their homework, right,
Pretty
Fridge?
disgusting.
I mean, they usually just like to copy each other, usually more or less. I mean, there's been people who cheat on homework for many, many years, but at the end of the day, that's why like I'm someone who always will do assessments and stuff in class and say if you fail the assessment, who cares? You check your homework, cool. You have 10% of your grades like 100, but you got 90% of your grade is like a 15. So, like for me, it really doesn't impact. It just hurts the kid in the long run, personally.
yeah,
Um, for it, which is nice, which is why I still give out tests in class. I don't do like take home ones or whatever for math because A, you gotta know how to do it. B, do it under pressure. C, do it without cheating. I mean, it's that easy for me on my side of things. For like the English side of things though, like writing English papers or social studies papers and stuff like that, like that's a lot. I mean, and I've had a kid try to cheat on a project before. But that's like you said, there's very easy ways to catch when a kid does it because if you copy and paste from the software, it puts in a bunch of random symbols that you will
Yeah.
never see. So like when I say, dude, what's up with all these like 50 different symbols you got? And he's like, oh, well, that's part of my thing. I'm like, yeah, explain this symbol, explain this symbol. And he's like, oh, well, and then he starts stuttering, starts sweating, stuff like that. I'm like, yeah, you cheated, you're 0. Like, you know, so the thing is, which is interesting that we're talking about this is that right now they're still trying to learn how they can get away with using it. And it kind of brings up, I know that we've talked about, or Squeeze Kid talked about it, but talk about orbs and, you know, the verifying proof of human, which is kind of like, I don't know if you guys have seen much about that on After Hours, but proof of human, like, it seems like it may need to be a thing in the future because AI is going to get so good at what it's doing. Look where it is now from the last couple of years. In the next 5-10 years, you might need to prove that you're a human and not AI because of how advanced it is. I don't know what you guys think about it, but it's really interesting.
Yeah, it's calls on anything AI, you know, but my full-time job is working as a security engineer at a local hospital. And that's one of my major challenges is how do we secure AI data? And we've, you know, we do our best to put security around AI, but AI is so good now that it can chart for nurses.
Mm.
It knows what a doctor is looking for. It knows what, you know, a patient's, you know, say stats look like, you know, their blood pressure and stuff. And it can input that data and chart in the same context that a nurse typically would chart in. So, you know, if you're somebody who, you know, types a certain way, it learns the way that you normally type and it inputs that data and just asks you if it looks okay. And it saves nurses hours of charting every day. But it's scary to think that that's out there. But yes, it is constantly learning, and it's very hard for us to actually secure that data because what's ours and what's Microsoft's?
Wow.
There are some pros to the AI boom, if you would call it that. I mean, with all of us having an interest in the markets, you look at stocks like AMD, for example, just one of the most recent ones. Monday, it struck that deal with OpenAI and absolutely rocketed. I know
Bro,
Royalty, you kind of had your eyes on that, but I mean,
man.
if it wasn't for AI, a lot of these tech stocks would not be where they are. Nvidia would most certainly not be where it is. So
Well,
there are some pros to our pockets for sure.
it's really funny too on, you know, the ER calls. It's like you could have a drinking game, you know, take a shot every time they say the word
AI.
AI.
Yes.
You hammered as
Yes.
fuck at the end of it, but I mean, it is the buzzword, and they know that the markets love that buzzword.
Yeah, it is a buzzword. And me working in information security full time, the bigger thing to focus on is how are people securing that AI? What is actually owned? Like, what is a technological standpoint between the different companies, right? Because we use, like, for the hospital that I work for, we use Microsoft Copilot for our AI. But what's theirs versus ours? I can tell you by looking at the actual policies, it is a gray area. That's the type of information to be looking at.
I think Microsoft is actually the, I guess you could say, the most beneficial to you because ChatGPT, all of it's their stuff. Like any answer it spits out, any information you put into it is theirs, and they will sell it. I
Yeah,
don't know.
that's the scary part for me is them essentially selling our lives out, you know.
I feel like here's like the big problem I feel like with AI right now is that yes, it's, you know, like Sambo said, yes, it's very, very beneficial to our pockets. It's lining our pockets in the stock market, and it's 100% everybody's benefiting from it right now. The problem that we're going to be facing is that the advancement of ChatGPT, OpenAI, Copilot, Gemini, all these different ones that are coming out is that, and it's kind of going off the idea of what Big Wick was just talking about with doing all the things for nurses. It's like, okay, so this software is going to is already taking jobs from a lot of people. It's already hurting the labor market right now, and which is why our labor market is kind of in shambles because no one's hiring because no one needs to hire because of software. And if you are unemployed, you're going to stay unemployed because you can't. It's hard for you to find a job. So our labor market is going to show this over the next couple years, and it's going to push us into like this really bad labor market for probably quite some time until we know how AI can also create new jobs. Right now, I feel like AI isn't creating new jobs. It's just currently taking over for jobs for people that they don't need anymore. I think that it's going to be beneficial very long term on a society, but right now we're not seeing it as a how does it make new jobs? It's saying how can it do my job for me? So if we go into this long recessionary period, because of how bad the labor market is, we're going to be here for quite some time until we can figure out a way to make the software create new jobs for us to come out of this bad labor market, because we just keep getting a bad labor market data. We keep getting a worse and worse labor market because it just keeps taking people's jobs. It's just taking them right out of the economy and saying, hey, I can do it for you for a lot cheaper. It'll do it for you for a lot cheaper. And it's gonna be that way, and the companies are lining their pockets because it's a lot cheaper as a result of it. So my biggest worry is that right now it's just taking jobs until it's going to start actually creating new ones. And I do agree also that we still need good nurses. We also need good teachers. So I do not want AI taking my job either. But besides the fact of that, that's the big worry for me, is that we're focusing on replacing people to then line our pockets with more money until we can start making new jobs with the advancement of AI. That's my biggest problem I have right now.
And unfortunately, the people who are being hit the hardest are young people fresh out of college.
Yeah.
I mean, their unemployment rate right now is double digits. These poor kids are coming out, and between the labor market being shitty and then AI, and so how do you get started? How do you get your foot in the door to even create a path for a career for yourself? I worry for these younger kids now.
And I feel like you saying, Carly, you spend a lot of your years in college, you know, knowing what you want to go to school for, and you get there and you
Mm-hmm.
get halfway through your program or whatnot, and then you
Put 'em
realize
in.
that the demand for what you just went to school for is no longer in demand anymore,
And you spent money for it.
and you
You
spent
paid
money
money
for it.
for it. Yep.
So that's a lot of people. You have to kind of go to school now and kind of plan. Well, I guess that was the thing then, but at first you just knew, hey, I want to be a doctor, I want to be a nurse, I want to computer science, anything like that. And now you have to kind of be like, all right, well, let me go look up the actual thing that's taking your job, like ChatGPT. You got to go and ask ChatGPT, what's the next, um, what job would be in demand in the next 10 to 15 years, just so you can know.
Yeah, I was just about to say the most job safe thing you can do right now is do a job that I'm not gonna lie. When I went to school, AI didn't exist, right? But
Me too.
it does now, and I found myself bass backwards into a situation where I'm now supporting AI, and if you just go to school for something that supports AI, you'll always be safe.
Yeah, yeah. I
It's kind
knew.
of interesting. I feel like we've kind of gone backwards, where we went from, an industrial revolution to a technological revolution. I feel like now we're going to kind of have to go back to industrial with trade jobs, where then mechanics and plumbers and HVAC guys and, those types of jobs AI can't do. There's certainly probably ways to increase productivity, but I mean, AI can't come and fix your toilet. AI can't come and, fix your light switch or that type of work. I think these kids are going to have to go back to looking at trades now.
And crazy thing to piggyback off of that, I I used to be a conductor for the railroad. This was back,
Really?
huh? Yeah,
That's
yeah.
interesting.
I used to work for Kansas City Southern Railroad, and so this was back in like 2002, no, 2014 ish. So I was there for some years, but around the time that I ended up leaving or whatnot, we had what's called belt pack jobs, where the locomotive or the train is actually controlled by us on the ground. Like we're standing outside of the train, and we have a big box strapped to our chest, and it has buttons and switches, kind of like a game, like a controller, and you're literally controlling the train from the ground with a belt pack controller, running the trains back and forth. And then two, the actual trains that you see on like the railroad that's moving at 40, 50 miles per hour, some of those had now have AI integrated into them to be able to operate themselves. And so on most train jobs, you have a conductor and you have an engineer. The conductor is the one that's pretty much putting the train together. The engineer is the one that's pretty much driving the train. Well, now they're getting dual certified to where you can now be qualified as both a conductor and an engineer, because with the AI integrated in the actual front end of the locomotive, it's going to be governed already by the speed is going to be governed already based on what city you're going through automatically, and all you pretty much have to do is just sit there and make sure nothing goes wrong with the train. That's it. Like, they're cutting jobs like that in the railroad industry by having self-governed trains. So it's hidden everywhere. It's hidden everywhere. And if you don't have the seniority to hold certain jobs or to make the cut, then you're getting furloughed, and laid off, pretty much. So it's everywhere. But lately, we've been seeing money in the market shift towards something that I don't think has a lot of, well, it hasn't been getting as much talk as it should be, but I know we've been talking about it here, which is rare earth minerals. So I'm not big on the information for it, but I do know that copper is one of the ones that's needed. I think, I can't remember. I don't want to say the wrong person. I don't know if it was Ford or somebody else, but they was talking about the copper that's needed for the data centers that Facebook, what Meta, and some of the other places are building. Um, so I think me and you, Carly, were kind of talking about it. What's your take on the whole rare earth minerals that's been popping up in the news lately and everything that you've been seeing?
So there's two aspects to it. One is the DOD has a law that's going to affect January 27, where anybody with a defense contract, they are not allowed to use any part of a mineral rare or a rare earth metal that comes from China. They're all going to be banned. I mean, to the most minuscule little piece or part. So that was the first thing that started it. And then the tariffs. And so when Trump first did Lib Day, China cut us off, trying to cut off the world from the rare earths, and said that you had to get a license, and that it's not exactly the most capitalistic friendly country. Getting these licenses was going to be very difficult. But Friday, the rare earth stocks, I mean, shot up. They had a really, really, really good day. Like most of them had double digit days because China said, no rare earths for you at all. So it's going to be, I think, a fight between us sending them chips or them sending us rare earths. So what it's done is our country is not short of the rare earths, but we allowed China to build this monopoly on them over the years, particularly the processing of them, that we've just kind of abandoned ours. And now we have this entire supply chain that we have to build in record time. I mean, to be able to provide what these defense contractors would need to build their tanks and drones and weapons and all this stuff is going to require a lot of material. So Trump is prepared to pump as much funds as he possibly can into these companies. Um, there's a really interesting list out there called the Fast 41, which is a list of all the mining projects in the United States that are going to be fast tracked. They'll remove all red tape, all regulations to get them up and running. So I've been working on that because it doesn't have the company name on them. It just has the mining site. So it's taking me some work. But this is going to be a profitable trade for quite some time. And it's, for me, a long term investment, especially going into that January 27 deadline. But I'm not a charter. I don't do these zip charts that you guys do. So I can imagine they probably look pretty scary on there
You said,
because they've been on these.
is that the
And
ticker MP?
yeah, that was the one I wanted you to look at because they were the very first company that the United States funded. And so they've been on a run for quite some months. So then they started kind of getting into like a good swing trade where like DTREF is my darling. That's my favorite rare earth stock. It's just kind of new and just beginning. But MP, I'd be curious what the chart says on it.
Yeah, I'm looking at it right now. It looks fairly good right now. Um, it is on a nice uptrend. Yeah. So right now we'll be looking at right now we'll be looking to see how this 78 to 79 support holds. But as of right now, it has a few gap ups. I'm not gonna lie, it does have a few gaps up. One on 10 9 and one around 10 10. So 2 days in a row, and it's continuing to move at this moment right now, and it is breaking out a big consolidated area. So buyers are super strong right in this area right here. So that's between 69 and 65. Buyers stepped in twice. Well, actually three times. Stepped in big time once on his dip below that, and then stepped in the second time, which was pretty good. So right now, to be on the safe side, if I had to build a position in this, I would look for a position starting anywhere here around like $69 to see if we can fill these two gaps that we show on the charts at 72 and then at 71. And then if we just retest the top of that around like 69 or so, I think that'd be a pretty dope start to see it move back to the upside. So um, one thing I have been doing lately, and this is just, anybody can do it. If you're a charter, start inverting the chart sometime just to see what you see upside down. You know, it helps if you're constantly somebody that looks at charts a lot. It just helps to get a different perspective on what you're looking at. Some people can see bearish trends a little bit better. Some people can see bullish trends a little bit better. But it doesn't hurt. Trading view, you hit the little settings button, invert the scale, look at it upside down, see if you can find trends on it like that. And then once you get done, you can flip the chart back right side up. You can flip
Well,
it.
Friday, sorry, go
Oh
ahead.
no, I was gonna tell them you can flip it right side up and then look at it from the upside. And the same thing I just told you, well, told everybody that this level right here has been holding up pretty well. You can see that that's kind of a level to buy on this uptrend also, too. So I would look for setups around like $69 on MP and to go back and retest the top around like 86 or retest these highs that we've been seeing around
So
there.
Friday, because Friday was such a good day, and it really was because of the tariff tweet.
Hmm.
I am hoping we have a pullback next week on them,
Yeah.
because anytime there's a red day, I've been buying. So because I've had some people asking about it. Are they too overrun, or are they too expensive right now? And I don't think so. Um, there's still I mean, billions and billions and billions of dollars that this administration is going to fund all of these mining projects. It's just a matter of if they take a stake in the company or if they are just funding the company. The structure of it depends, and then they'll be rolling them out kind of one at a time. But my darling Dietrich, next week the CEO is going to be meeting with the administration,
Okay.
so that could produce some positive news. But I'm really, really, really hoping we have a pullback so that we can get back in.
Okay. Yeah, I like it, and like I said, my looks on it won't change as far as the uptrend on MP won't change until this structure that we're seeing right now, where we're seeing this uptrend, until that's broken, then I wouldn't change my stance on it. I think around 69 you'll continue to buy, and unless something shifts and we see a change of structure and it starts this,
Can
let's
you
see,
can you zoom way out on that when you get a chance, like to its lifetime?
lifetime.
I would love to. Yeah, I would love to see if it started much higher, or if this is actually the highest it's ever been.
No, this is the highest that has ever been. Looks
Okay.
like, yeah, this is all
Because
time
there
highs.
there are a couple tickers out there that at one point in history that have been on trading for quite some time, like 10 years, 15 years,
Yeah,
some even 20 years.
this one's been on the market. Looks like since 2020. The highest that is peaked
Oh,
before now um is $60, and that was back in 2022. So this year is when it came back and it finally retested these levels. So let's mark out these
because
highs right here.
that was one of the companies that the administration took a stake in. And
Okay.
this is one of the companies that's going to process, which is what we have never had a company that actually does. That was what China had a monopolization on, was the process of it. So these processing, URAF is another ticker that they're going to be processing. Those companies are going to do really well because there aren't very many people that do it.
Okay. Okay. So yeah, once it broke those all time highs around $60, then you've pretty much been seeing it use that as at the level of support, retesting pretty close to those previous highs. That's something that Wick was talking about earlier with IWM, retesting previous all time highs, and then it's been using those levels to catapult itself back up to the upside and make new all time highs. So like I said, it looks good unless it breaks that uptrend that it has. Then we may see this, kind of a downtrend forming based off of this channel right here. But for the most part, I think we see either uptrend or we see it trade sideways, and you will just have to buy the dip. Um, like I said, right now $60.14 is being used as support for bigger dips at the moment. So
There you
I
go.
think rare earth minerals is something that I should even be paying attention to more also, because this could be one of those sector rotations that we get into, when technology decides it wants to have a bloodbath with the rest of the market, and this is something that could be funneled into for the most part
I
on those days like that.
I think we're already into the shift into it, and I
Okay.
highly recommend that everybody should have at least one of the rare earths, and then also the precious metals, either gold, silver, or copper. One of those, I think, is kind of crucial trade right now. Also,
Okay. Cool, cool, cool. Earnings. We got some decent earnings coming up this month, and some of the ones that I'm paying attention to. And if any of you guys have some that you are looking forward to, whether you're on the stage with me or in the chat, let me know. We can look at it. But a few that I'm paying attention to, it's Netflix. I've been saying Netflix needs to go on a stock split for the longest. I think it's pushing close to 11 or 1200 per stock. I mean, per share. So it's at $1,200 a share right now. So Netflix is on the 21st. We got Tesla on the 22nd. We got United Healthcare. And the only reason I'm kind of paying attention to United Healthcare, it's a lot of hype around them. And every, good earnings report, it skyrockets. So we'll definitely have to see how that's being affected. SoFi, they have earnings on the 28th. Something that I'll be watching. Um, I've been watching that pretty close. Has there been any big news? Have any of you guys heard any big news about any of the, student loans or anything like that could possibly play into more of a catalyst for SoFi?
Not from my understanding, honestly. I haven't really heard much about it. I'm sure that if Gio's still here, Gio could attest to it more than anybody else. Because Gio is the guy that rocks SoFi and loves SoFi, like to the day. He's gonna rock with them till the end. But I think I think just earnings overall. I mean, I don't know if you saw this royalty, but you know that Taiwan Semiconductors this week on Thursday. I
Oh,
don't know if you knew that or not.
okay.
TSM.
TSM, that's a good one. I missed it. I missed it. And I don't be knowing if some of those tickers like that. Is TSM like one of those 80, what is it called? ADR?
ADRs.
Yeah, I think TSM is one of those, isn't
Uh,
it?
I don't believe so.
I know ARM is. I can't remember.
No, it's not an ADR.
Okay, okay. But TSM, when you said TSM earnings was?
Thursday. Let me see if it's after.
Is it the
Before. Oh, it's
16th?
before market open.
So it's
Yeah,
1016?
16.
Okay. So we
Yep.
got TSM 1016. Um, Google is going to be 1029. Meta is going to be 1029. Microsoft is going to be 1029. And then we'll see Apple
well,
1030.
and I'll just chime in really quick that they start with the banks, and the markets really like the bank ones. Those
Okay.
because of volatility is used right now. Green days are going to be greener, and red days are going to be redder. If banks come through with good numbers, we could have some pretty good green days next week.
Okay.
Something to keep.
Do you know any off top? I'm getting ready to pull up the calendar right now, but like
It'll
JP
be the
Morgan or Bank of America, anybody?
Yeah, it's all the big ones. JP Morgan,
it's
Goldman
all
Sachs.
that. All of them always report the same week, and it opens up the season.
Oh, okay. Okay.
I feel like that's kind of like the overall the big now focus, I think, with government shutdown and not a lot of data coming out now, I think all eyes are on earnings for all companies because if earnings are able to back up what their valuations are, that's great because these stocks are getting very highly valued right now overall across the board as they're pushing all-time highs. I think if the earnings come in great, then it justifies the valuation. But if earnings start to break down and you start to see them missing across the board on numbers or capital expenditures are starting to slow down and stuff like that, that is going to show us a sign of slowing economy, which could also start to create a downtrend in our market. So now, since there's no data to look at, all eyes I feel like are on earnings for the next couple of weeks
Yeah.
until we open back up again, whenever that is.
Okay. Yeah.
100% Fridge. I totally agree. And that coupled with high volatility, it could really make for some interesting trading days to come.
Okay. Yeah. Because I'm seeing it right now. I see we got J.P. Morgan, Wells Fargo, Citi. I think even BlackRock is going to be
Yes.
has earnings coming up on the same day.
And
So
it's exciting.
yeah. So appreciate that. And then at the end of the month to have what Google, Meta, Microsoft, all of those are gonna report on the same day, and then the end of the month with Apple. After we've been watching Apple just going to absolute, you know, just moonshot to the upside. I think that's gonna be super interesting too. So Netflix for me has been on an absolute tier since the Mike Tyson Jake Paul fight. I mean, even before then, but I remember. I don't know if any of you guys watched that fight, but it was a big thing that it was, the fight was lagging and everything, and then the stock continued to go up.
You
I
can
guess,
call it a fight.
well, you know what I mean, but for the most part, the stock kept going up, even though we thought, something drastic was gonna happen. But they keep increasing their streaming numbers, regardless of whether they're doing crack down on password hacks or anything like that. I mean, everything they've been doing has kind of been right and moving more into the live sports streaming space also. So Netflix,
Not only that, but you could attest to it's one of the last things that would ever be cut out of a home. I don't know if I speak for everybody, but when you tap into the market of what children are interested in, it's essential, right?
I
Me
agree.
speaking as yeah, sure. Me speaking as a parent, I don't care. It doesn't matter to me. What matters is my kids are happy, right? So if they are interested in something, I'm spending money on it, right? And it's something that I learned in business school is the most profitable market is the child market. For that very reason, is parents don't care. They just buy what makes their kids happy. And in my home, there would be a mutiny if I cut the streaming to Netflix. So there's it's just one of those things. It's immune to the market because people will never cut it.
I don't have children, but for me, streaming services, that's a staple. That is not a discretionary. For me, that's a utility. That's not even a
That's right.
question and an if ever. That's a must.
It's getting paid no matter what, and I think that Netflix is my last line of defense. Like if I was starting to choose services, Netflix would be the last one.
and what's crazy is, like you saying, I don't even like I got, it's me, my wife, two kids or whatnot. None of us relies on. We haven't had cable for years,
Yeah, me
like
neither.
Yeah, we
years.
don't pay for cable either.
You guys have
Um,
TV?
you don't have TV. You don't have a TV, David. Oh man, but yeah, like even Gio said, finally dumb cable. I mean, having cable now is almost like you know, having that cordless phone, having
Yeah,
that
you
cordless
know,
house phone.
you know who's got cable? My dad's got cable.
Mine does too. Mine does too.
Man, I mean, like we was talking about with the job reports and the, the checks and everything. Like, at one point in time, you had everybody's number, house phone number, the cordless phone. I would remember outside as a kid, you had the cordless phone outside with you too, just in case the phone run, parents called or something like that. But that's kind of like cable. Everybody was had to stay tuned in order to watch their shows. And back then, you watch an episode and then you get the little teaser at the end of the episode and you have to wait next week, next Tuesday or next Wednesday for the next episode to come out and things of that nature. It was a reason why people had cable and had the channel guide and all of these things. Now it's just binge watching. You don't have to wait on the most that you have to watch on is the new season, which we still waiting on the new season of Stranger Things to pop off over here. But
Not to
like,
mention commercials.
huh?
Not to mention commercials.
Yeah, commercials. So I mean, and you can even get rid of that with like, some of them do the ad free things.
Exactly.
Crazy if you watching Amazon Prime, like the commercials have QR codes now that pop up, and you sitting in the bed or on the couch, a tissue ad come up, and then it has a QR code for Charmin's or whatever.
How to buy.
You scan it on the TV, send you to Amazon Prime, you order it, it comes to your door. I mean, the plan is genius, but
It's really crazy.
but
It sounds like you're David. You're always ad free.
yeah, yeah. So I mean, cable is just kind of one of them things that's kind of non-existent right now because I mean, people don't have to wait to watch seasons of stuff. They bringing all the retro TV channels back, Um, then you got Netflix original, Hulu original, Amazon Prime, exclusive. Everything's through streaming. So I like Netflix long term. I don't see it going anywhere, kind of like you guys were saying, and it can do whatever it wants to do after earnings. But I think once Netflix finally decides to do a stock split, oh my God, I think the prices are gonna go crazy once they announce that. And yeah, but I think it's gonna have to split eventually in order to draw some more investors in, kind of like AVGO had to do. GO said they probably won't. They probably. I remember when Google and Tesla and all of them were trading like $2,000, $3,000. So once people stop pouring money into it, I don't I don't know what else they're gonna have to do.
I would love to see it split. I'm with you. I think it would do really well if it split. But
Yeah,
otherwise, you have the leveraged ETFs or the ETFs that carry it for those who can afford the $1,200 price tag.
So what about cost? And I think cost should have tried to do a split too. But I think what
Yes.
they've been doing is they've kind of been draining the prices down because now it's back under 1,000. It was pushing under 900 almost, but I think Costco is another one that should have had a stock split also. Just to draw more
Costco's
investors.
price is staying afloat because of their hot dogs.
They they had we don't have a Costco here, so we have Sam's
Oh,
Club.
that's
Yeah,
That's
that's un-American.
we got a
that's
Sam's
a
Club.
good.
Yeah, so we ain't good enough for a Costco. Y'all know if y'all ever seen the episode of South Park where they had to fix up South Park to get like a Whole Foods or whatever. But that's kind of how we is right here. Like we don't have Costco, we have Sam's Club, which not to down talk Sam's Club is done us right. So but yeah,
You're out in the
Costco.
Midwest, aren't you?
I'm in the South.
The South. Okay.
Yeah, so
Yeah, we have Costco in the South. So
I'm in Louisiana, so we ain't, they ain't bringing no Costco here yet. I think Texas had like
South.
I think Texas has Costco and HEB like Sam's Club is the only thing that we have really out here.
Okay,
Yeah.
South Carolina's where it's at. We
Okay.
must have all the tacos.
Facts. So, but like I said, I even think Costco would be dope if it's split too. So, Netflix, like I said, they got earnings coming up. I think that's a good company to invest in long term. We all just agreed they not going nowhere. They kind of got the streaming game in a chokehold, so that's gonna be pretty dope for them. Um, Tesla has earnings on the 22nd, so the day after Netflix. We've all seen a massive run up on Tesla over the past what month? Yeah, so starting from September all the way up to now, we've been seeing a run up and then some chop consolidation. So they have earnings in about 10 days. That's going to be really interesting because you don't know whether they're going to try to drain the price for a retest of these levels post ER, or if we're going to get that earnings, second breather and continue to run up. So um, right now, it's kind of in a chop zone for me between 471 and 396. I get it. It's a big zone of chop. If I want to go into a tighter range between 450 and 415. And we just kind of seen all of this kind of get chopped up. A lot of money has been made to the upside and to the downside on here. But the price action is going to have to reveal itself pretty soon with earnings coming up because they're going to have to set the stage for that post ER move, whether it's up, down, or flat. Something's going to have to happen in this chop zone with Tesla. So um, one thing that I do notice, or I did notice, is we saw it right here with this candle there. So that's a bearish engulfing candle on the daily. With those candles, I'm always bearish until I see the highs of that candle being taken out, which is 471 at the moment. We saw the chop below this level, probably about 50%, give or take, of this big red candle right here and a slow chop to the downside. Um, we are seeing another one here. So the sellers, they took out the previous highs here and then it broke down and took out the lows there. So it lets you know that there's money continuously flowing out of the trade as they prepare to make the next move. On the weekly you see the same thing. We even got a big bearish engulfing candle on the weekly right here compared to this weekly chart. So uh, I mean, as of right now, I wouldn't go calls too long, just because we're seeing a lot of weakness show week after week. 2 weeks in a row now going into Tesla. I think I've been given a price target to look out for around 400, and that's just the retest of this strong bullish weekly candle that we have here. So the same way we've been looking at the bearish engulfing up there, we see the bullish engulfing right here on the weekly. So these are like my favorite candle patterns to pay attention to and to look out for because they always, not always, but they try to show an influx or a decrease of money on the charts so you can have an idea of, do I want to pour money into this, or we chop for right now? You do see false breakouts, but like I said, down here, you see that candle right here, and then finally when it takes out the highs, then we start to see a week to week uptrend, and you start seeing money flow into it till you see this candle right here take out highs and lows. It's pretty close. Let me see. The highs are 355.87, 355.39. So it barely took out the highs, but we did see that. Um, we did see money start to flow into it, and now we're seeing the similar pattern up here, where the bears are starting to take over, and we're seeing a decrease in price. So this is gonna be it's gonna be very very interesting to watch. going into it. I know Gio just said it. China could kill Tesla earnings. The times that we have seen Tesla just really, really bleed out, it's because they're getting poor reports coming from China. Same thing with Apple normally. You normally see those two stocks. If they're doing bad or getting a bad reputation or bad news from China, you see like a sharp decrease in prices over here. And yeah, Tesla either is going to be doing real good or real bad real quick. So as of right now, for me, my take on it, and this is just my take, I'm not a financial advisor, but be careful going long on Tesla right now until we see some type of candle structure indicating that buyers are starting to step in. You don't want to catch a falling knife, especially like we saw Friday. So careful on that. Um, I would start looking for bulls to start stepping in if we see it below 396. This would be my area right now that I'd be watching for some type of support to step in. This would be almost about 50% of this move to the upside. So I mean, it's not really 50%. It's about 60%, but that'll be the first major retracement from this big move to the upside. So I'm not gonna go any further about what I think can happen until we actually retest these levels and see if this structure holds up and if we can retest these levels up here around 415. But right now, I can see 437 being the highest that we see right now, and that's an attempt to break these highs here. But for the most part, you just have to see how it plays out and what institutions want to see going into earnings. Um, anybody on stage or in the chat? I mean, any takes on Tesla or anything like that?
Did you, I don't know, Rosie, because I stepped away for a minute to go to the bathroom. Did you talk about the potentials of the tax credits being alleviated from and how it could impact Tesla because of the new administration in office?
I didn't take it away though.
I mean, I'm just thinking more of just out loud, like, people were getting, there was so much hype behind Tesla's delivery numbers and stuff like that. And it rallied up in delivery numbers and they killed delivery numbers, but then it sold off right after it had like a really good beat on their deliveries. And I think the reasons behind it is that everyone's buying Teslas now because of the loss of the tax credit you get. It's like the $7,500 federal tax credit incentive or whatever it is to buy an electric vehicle, because they're getting rid of that.
Mm,
So I'm not quite sure if that will also play a huge impact on Tesla, obviously, because you had really good delivery numbers, kind of almost like front loaded the delivery numbers because everybody wanted to get that tax credit now before it's no longer there. So I don't know if Geo says it's gone now, so that's what I kind of figured. So I'd be curious to see how that'll play into their earnings maybe the next couple weeks. With not everyone's going to want to buy a Tesla maybe now because you don't get the $7,500 write off for your taxes, right?
okay. I mean, that's definitely something that you could take into consideration. Um, and we'll probably see news or something similar to that news being dropped once once the bulls have been decimated. We'll see
Yeah.
something pop out like that. People are not shifting from Teslas, but on the flip side, I've been seeing a lot of EVs. I've been seeing a lot of Teslas, a lot of Cybertrucks, a lot of Rivians. Um, I actually been seeing a lot of the electric Hummers. So I mean,
Yeah, it'll be interesting to see like if it still continues to boom in an EV vehicle, the space with tax credits now not being there anymore. It'd be interesting to see if people are going to be like, yeah, it's fine, I'm still going to buy it. Or, I know that Tesla announced what, Tuesday, they're going to make a under 40,000 or under whatever it was, like a cheaper model, I believe, if I'm
okay,
not mistaken. That was like the big, announcement on Tuesday, I believe, for Tesla. So I think maybe that's them trying to maybe compensate for them knowing they're losing that $700 tax credit or they have lost it. So now I'm wondering if they're now trying to innovate in a different way to still get sales up. So if you offer a cheaper EV vehicle from Tesla, that could still drive traffic to their dealerships to then buy their car still, now that they don't have the tax credits that go with it.
Mm, it's possible. It's possible. It's hard to keep up with Tesla, especially the volatility. You don't know whether they're gonna prop it up or whether they're just gonna sink it.
Yeah.
But
So that's the one thing that I really got from my side. Tesla is knowing like how they're going to now pivot with the loss of tax credit, and I'm wondering if that announcement on Tuesday would be that kind of way of trying to, compensate for the tax credit loss and now making a cheaper EV vehicle. Maybe I don't really know. I don't really trade Tesla really that much. I mean, it is definitely a volatile stock that moves 3-4% in a day a lot of times, so I don't really touch it. But yeah, that's my only information I got on Tesla from my side of things.
okay, pretty dope information. Anybody else got a spin on Tesla before we move on to United Healthcare? I want to take a look at that. But anybody else got a little spin on Tesla? Nope, nope. All right then. United Healthcare. I normally don't pay too much attention, but it's been a lot of hype on it lately. Um, yeah, they have earnings on the 28th, so close to the end of the month. Yeah. Okay. Yeah. So as of right now, I do have these two trend lines on United Healthcare. Only thing as of right now with United Healthcare, I like it. We just need to see this trend hold up and not break structure. If so, then we probably will start seeing a sideways downtrend going into this, or well, not a sideways downtrend, but a sideways movement, and see some consolidation between 362 and 325. Um, I think the big thing is one of these gaps down here are gonna get filled. Is this the earnings being priced in right now before it gets dumped down here post earnings, or is it gonna want to feel its way? Some type of news comes out because we've all seen the crazy news for United Healthcare come out and like decimate the price action. I mean, right here we saw it fall from what 392 all the way to 255 in the span of a week. So there's definitely some volatile movements in United Healthcare. Um, but this would be something that I just want to watch out for. It's a lot of buyers down here around the below 300. So if it does retest these levels again, depending on how the buyers step in back down here, this could be a nice buy up. If the earnings turn up green somehow, but it still tanks, I think that this would be a decent buy, and it should be able to retest these 325s if it sees this. But if it wants to go up, I got 406, 426, 454. Those are my levels for retest, just because it's been there before. It's a big gap up here. And let me see. April, was this when the guy from United Healthcare got assassinated? Anybody know off the top of their head? Because I know somebody
Uh,
from United Healthcare got shot or something like that, and it reacted negatively to it. But it's a huge gap up here to around like 579, 580 that hasn't been retested yet on United Healthcare. So it's kind of a catch 22. Do we want to fill this gap to the downside first before the move up, or what's gonna happen? Because right now it's rejecting around this gap right here. It's not able to completely fill. Well, it has completely filled this gap right here. So now it's starting to reject, and we're just gonna have to see if it's gonna want to trade sideways within this range right here, or if it's gonna break trend and start to trickle its way back down, possibly to where it's been consolidating heavily over the past few weeks, which is that 311 to 294 zone. So just keep your eyes on United Healthcare this month, just to know which way to go with it. These levels should be good to hold out to the end of the month. So my price targets would be 362, 454, and I'm not gonna go any higher than that right now. I'll just go 454 and 362, which would be my strike prices to shoot for.
And I would just say, from my macro view, this is one of the sectors that I think is going to outperform going into next year.
I can see that. I can see
Yeah.
that because it's been so heavily beat up
Yep.
this year that it has a lot of upside potential going into next year. So,
Yeah, it has a lot of room to run. So I am very bullish on the healthcare sector.
what's up, McLaren? He just popped in. He said the CEO was assassinated around that big major gap down. Appreciate that. Um, but yeah, from this 580 down to 489 and then a tank following that, it's just been heavily beat up. So, like you were saying, Carly, this could be something that could be a outperformer go, going into next year, just because it's been so heavily beat up. Gio said by a
Yeah.
kid who went to school a mile down the road from him. That's crazy. That's crazy.
Gosh.
Yeah. So I'll be watching that one. Um, Google. Google has been a major money mover. Okay. So I already kind of got a channel drawn out for it. Zoom in and see. It's a lot of buyers for Google right now. A lot of buyers from what my chart's showing me. Um, it's been on a uptrend since, let's consider this neckline right here above 180, the uptrend, the start of the uptrend, even though it made a minor one here. This was a recovery. So from July up to now, it went from being trading around 176 to now trading at 255, 256. So it's a lot of money flowing into Google over the past 6 months or so. And that's pretty much after it was getting pretty much beat up pretty bad, going from the beginning of the year all the way up to April, and then from April up to now, it's been carried. It's been absolutely carried. So as of right now, this is what my eyes are seeing on Google. I don't really see any bearish candle patterns yet. I don't think this one really took out the highs, because the high is 256, the high is 255.78. So it didn't really take out the highs to make that bearish engulfing, but it has been trading at a downtrend. All right, Wick, we'll see. Appreciate you for chiming in with us. But Google, it's been in a bit of a downtrend. So this would be something that we'll just keep an eye on to see what type of catalyst or something is going to come and form in. As of right now, we could continue to see the slow trickle down. If it holds this trend, if it breaks below it, then we might see the flush and try to fill this gap between 224 and 210, 211 if this breaks. And this is just all if, this movement that we saw Friday, if it carries on into this upcoming week, next week, or the next 2 weeks, this could be something that we see continue to drop in prices along with the rest of the market. So eyes on that. My gut tells me that a lot of these stocks are going to want to get drained pretty quickly to make room for the earnings catalyst. But like I said, I'm not 100% sure. I just know that some of these stocks are just, I think Frisch talked about it yesterday. The RSIs being high. and not really showing the actual cool down that you see on the stock prices. So I think a lot of these tickers are oversold on a larger time frame. We need to come down some, kind of like we have been seeing on Amazon Geo. It does need a major ER. They have earnings too. I think it's on the 30th, but for the most part, Google looks good long term. If we see another breakdown or a sell off, I would definitely look to buy the gap. I mean, buy the dip anywhere below 220, and that'd be a gap fill here. So, and
And that
huh?
I was just saying that coupled with the VIX being low for so long, because the VIX is essentially an RSI on the S&P 500. So the lower it is means a way overbought status, and it's been low for a long time. So that's just essentially a market RSI that's way signaling overbought.
Yeah, yeah. So we both agree on that. Like I said, if the VIX is showing that, I 100% agree that the market needs a complete cool down, like all the way around, as far as technology goes. Because it's just ever since Trump, he did what he had to do. The market dipped to damn near all time lows, 52-week lows, and next thing you know, we rip into the upside with no remorse for any bears in sight. So it's been a good market this year. A lot of upside calls long term after the dip would have been 100% winner. But yeah, I wouldn't be surprised if Google is one of the ones that's cooling down. Meta is already starting to cool down. They have earnings the same day, and we already seen Meta starting to cool down. It pushed as high as 796. It's trading almost below 700 now. So it's filled this gap right here. It does have another one down here between 621 and it's 606 and more down here. Now, I don't know if this is gonna be a post ER move, but we've seen money drain out the market before. I don't know how strong, like I said, this tariff talk is gonna be or what's gonna happen, how dramatic next week is gonna be. Even Carly, with you saying that the VIX is extremely low, and it needs to pump eventually. But yeah,
Well, we
Meta.
got that good spike on Friday, so volatility is high. So I anticipate whatever movements happen are going to be elevated both
Mhm.
ways, though. That's
Yeah,
why it's really important to be very nimble and ready for it to go up or down.
agreed. So um,
Good
on
swing trading.
on Meta, like I said, be be careful of pullbacks. I mean, on the daily, once again, what are we looking at right here? This candle's taking out the previous highs and lows. We saw it once already, right here. And the following day, we saw a gap down. It got bought up until it finally broke it. And the next day, after it broke the previous bearish engulfing on the daily, after it broke those highs, it sells off the next day. So the market is extremely, extremely choppy. Definitely have to be careful. Definitely have stop losses set in place, and don't try to buy when it's too high. So be careful on that one. On Meta, it could have more downside depending on how we open tomorrow. Microsoft tried to rally, but it was short lived too. It was getting close to like 523 before it finally started to sell off. 531 was the highs that we saw last week on Microsoft. and now we're breaching a trend here, and we're looking at 511 to 510. So I'm still thinking that everything could come down a little bit more. We might get a gap up tomorrow to squeeze out some of the bears that was hoping for the continuation Monday, but I think that since the market was so extremely oversold for the day, we could see a nice little pop in the morning and probably some consolidation tomorrow. I wouldn't look for a lot of movement tomorrow if we gap up. So, like I said, they have earnings on the 29th. Anything under this neckline right here, I guess it's not a neckline, but anything under 492 right now would be my buy zones. Yeah, anything under 492 right now, that'll be my levels to start watching for bulls to step in. Just because it's been a hard fight for it to actually get that price action up here. It's pretty close to recovering, but I mean, Barris was so strong over here. It took a lot. It exhausted a lot of momentum in order just for it to get that high and to turn around and sell off. Bulls just wasn't strong enough, and of course, it sold off with the remainder of the market. So, if we can get this low, then I like 492. But if we trade sideways and kind of watch this, I would say 531 to see if we can retest these highs, but it's just going to be a chop battle back on the way up. And eventually, if we retest it, if earnings doesn't send it through the roof, it's going to get drained right back down for the most part. So that's just my take on Microsoft. And then Apple. Apple is one of the ones to finish off the month right there. And we saw a crazy, crazy downside candle Friday from Apple also. Um, it couldn't really break above this 260 level. We saw a lot of chopping consolidation around here, and eventually it just got exhausted. I mean, that's just what happens. Um, it needs to come down and breathe a little bit just because it hasn't had a lot of movement in this range right here between 255 and 260. It just hasn't had a lot of movement yet. So eventually it's going to exhaust and drop down. I was looking for at least a retest of 251. One of the members, I think we talked about it. I gave him a 240 price target, and we're not there yet, but it got pretty close. I think we actually feel one of those gaps right here. And so the Bulls are attempting to step in, but if we get back above here, I'm expecting some rejection to see how it reacts when price action actually retests what was actually support at one point in time. Might see a flip and this becomes actual rejection levels. Um, I mean, even up to 255, actual rejection levels until we can actually take out 260. So I wouldn't be surprised if this continues to roll over somewhere around here on Apple, and we continue to at least show up down here where this next gap is around 239 to 238. So um, that's just my take on a couple of this month's earnings. We have more, but we can start honing in on a little bit more. The closer we get and really dissect more charts as it gets closer to some of these ER spots. So I know I didn't get to everybody's tickers in the comments, but we'll talk about it. I'll post charts. I'm gonna be posting them all the way up to market open tomorrow. But for the most part, I think we held everybody fairly long enough, close to about the 2 hour, and we had an amazing talk today. Amazing talk. I appreciate, Carly stepping in, David, Ryan, Fridge, the whole Kingdom community, everybody in the chat. I appreciate all of y'all um, making a round table talk what it is, because these are conversations that need to be had, not just do we buy calls or puts. but to actually look at stocks, what's going on in the market, break down and dissect to make sense of how to pivot and to adjust. So I appreciate everybody that's here and that was here on Sundays, with us time after time again. So as always, I want to leave you guys, allow the analysts here at the Kingdom to leave you guys with anything that you want to set on a spirit before we head out this afternoon.
I just say keep your head on a swivel. You ready to duck and dive?
Okay, that's I agree. Cause Friday, a lot of heads were not on a swivel. You feel me, including mine. But
Hmm.
it happened so quick. But yeah, Ryan, David, Fridge, anything y'all want to leave with the family?
Sure, bro.
Yeah, yeah, just keep, like what Carly said, same thing. Keep definitely stay on your toes and keep it small and don't give up.
Yeah, I would. I good luck this week because I don't know what to do. Um, yeah, this is gonna be a wild ride that we're all gonna be facing in this market here. It's gonna be a tough one every single day, and yeah, I usually say something really really inspirational. I don't have anything. I don't know what to do anymore. So I'm out of ideas at this point. I'm not gonna lie to
Hey,
you.
it be like that, bro. Facts, facts, facts. And like the rest of my family, just letting you guys know, keep your head on the swivel. I say, I don't want to say that you can't trade this market. You feel me? Um, definitely know
You
why
just have to
you're
have a plan.
high.
You have to have a plan
You
going
have to have a
into your
plan.
trade.
You definitely have to have a
Yeah,
plan. And I was gonna say, know why you're entering, know why you're exiting the trade, know what your
yeah.
goal to make for the day is. When you before you even decide to put money into it, know whether you just want to make 50, you want to make 100, you want to make 500. Know how much you want to make because with the market in these indecisive moments, game plans can be ripped apart in a matter of minutes, let alone seconds. You feel me? So I think Ford just said SPY already at 660. Yeah. So that was one of my targets I was watching, but Tesla 425. Everything's already trying to move. We just have to see how that opens up, or does it hold by the morning? But like I said, have a plan for going into it. Know how much you want to make. Know how much you want to lose, because it's a part of the game. And if you can't handle
Absolutely.
losses, if you can't handle these losses in the market, then take your money out and go do something else with it, because you're gonna take those losses. If you can't handle it, then the market isn't for you. Seeing red days isn't for you. Even if you're buying shares, shares are gonna take a dip. So know why you're in the market and be prepared to go to war every
Mm.
day, every day. But the good thing is here in the kingdom, we ain't gotta go to war alone. You feel me? You got a team here. Um, Ladies of the market. You have Carly. We're building a foundation for um, women who want to get into the market, and I appreciate Carly for putting that together. Like Jackson just say, "Hail to the queen." We appreciate you for
And I'm
putting.
here for any of the ladies, and I am an open book. I've got the Ask the Queen um, channel. Anybody ask me anything. Don't think anything's a stupid question. I don't care what level you are. I'm here to help however I can. Share
Definitely,
whatever I can.
definitely. So, like I said, like we all said, just have your head on a swivel, have a plan, have a entry plan and an exit plan. Definitely for this week and any day. And for the most part, cash is always a position. Don't feel obligated to enter or exit a trade if you're unsure about what could possibly happen. Um, because the market definitely sends you in your emotions, and it'll point out your most like your worst flaws in your personality. So definitely want to have a game plan when trading these markets, especially with this volatile market that we're in right now. So once again, I want to appreciate everybody for tapping in with the round table talk. And until next Sunday, hope everybody do good, be on the right side of the market, and we'll catch you guys later on.
Absolutely. Thank you for
All
help.
right.